What's going on, everybody, and welcome to your Financial Dose. Today we're going to be talking about why people still buy gold. Gold has been part of human history for thousands and thousands of years, and has been linked in many cultures to immortality, gods, and wealth. But why is it that this metal is still used today and is still revered? Well, it all starts off with the properties of gold. Now, gold is a metal like many other metals. You have iron, you have nickel, and so on and so forth, but what makes gold so special compared to those other metals is, first off, it's easily distinguishable. So that actual gold color is very easy to recognize. Second, it's very malleable. So you can melt it over a common flame, and with this, you can then create a coin. Other metals, if you have to heat them to thousands and thousands of degrees to actually melt them, to actually be able to manipulate them, that makes it very hard. Gold is also a metal that doesn't corrode, which means that it'll keep its gold-like appearance for a very, very, very long time. And finally, when you're actually looking at gold mining, when you find gold, it's in its purest form. It's not mixed with multiple different other metals, which again makes it very easy to extract and then work with. And since gold was always revered, way back in the day, people started using gold as a currency of exchange. So instead of trading a cow for a pig, or a stack of wheat for a bag of apples, people actually started using gold as a means of exchange. So instead of having a coincidence of need, meaning if I have a pig but I don't need apples, well, we can't trade. But if I have a pig and I need wheat, and you need apples, then we could trade in a triangular fashion. But that still requires a coincidence of needs. If we have actual currency or coin or a medium of exchange, we don't need to have a coincidence of need. We could easily just transact a pig for a certain amount of gold and apples for a certain amount of gold without actually needing the pig or the apples for the counterparty. This made trade much more simple. And moving all the way up to around the 19th century, where most currencies were actually set to a gold standard, meaning that every amount of currency is backed by a certain amount of gold. So the more currency that exists in the world, the more gold that needs to be there to back it up. So in the later half of the 20th century, many countries were getting off of the gold standard and introduced something called the fiat currency, which is no longer backed by a certain amount of gold. It's backed by the promise that the government will always honor this, let's say, $1 bill that will be able to buy X amount of stuff, or that will be worth so much in the economy. Obviously, inflation will change this, but the government backs the currency. So now that we did a very brief overview about how gold was used in human history, we can now look into why people still buy it today. So first off, people see it as a great way to pass wealth on to future generations, because gold tends to hold its value over time. Throughout history, when the USD actually depreciated, or when people were scared that the currency would lose too much value, they would actually put their money in gold, and this would actually keep gold prices high. And following this logic, it actually serves as an inflation hedge. So again, if you're looking at the stock market in times of high inflation, the stock market starts to go down, people get scared, people would sell the stock to actually buy gold as well. And this becomes kind of a self-fulfilling prophecy, because if everybody thinks the same way, and everybody thinks that buying gold is the best thing to do in an economic uncertainty, or if there's high inflation, or if the currency is depreciating, or if the stock markets are tanking, well then gold will still manage to hold its value and will remain a good investment in those uncertain times. However, if people decided to all of a sudden buy silver instead of gold, well then we would have a shift in what gold does in the economy. But for now, the consensus or the status quo is that gold remains this sort of commodity that we purchase in times of economic uncertainty. So just as an example, in 1970, the United States government fixed 1 ounce of gold to be equivalent to $35. Okay, so if you have $35, you can buy 1 ounce of gold. So let's say in 1970, $35 or 1 ounce of gold could buy you a stove. If you fast forward today, where 1 ounce of gold is worth almost $2,000, that $2,000 can still buy you a stove. But if you have that $35 that you initially started with, well, $35 today certainly couldn't buy you a stove. So that's also an example of how gold is a protection against inflation. The value of gold increased over time compared to the value of $1. And again, since fiat currency is backed by the local government, so if you're looking at the Brazilian real, well, it's backed by the Brazilian government. If you're looking at the Russian ruble, it's backed by the Russian government. If there are geopolitical instabilities within these countries, the actual currency of that country will depreciate. It's very normal because people are less enticed to actually invest in the country and buy those uncertain currencies. So what people would do in times like that is they would simply sell their currency and buy gold. And this again is another way to sort of protect your wealth, because gold is a global commodity and is denominated in US dollars. Now gold, like any other commodity, has its price fluctuate based on the supply and demand. If the demand for gold is very high but the supply remains the same, this will push the price up higher. If the supply of gold starts to go up, meaning there's more gold available to everyone, but the demand for gold remains the same, well, prices will fall down. What we're seeing is that if you look at emerging markets like India and China, the demand for gold as they increase the overall wealth of their countries is rising as well, which can also explain why prices of gold can go up over time. So not only do gold prices fluctuate depending on the whole geopolitical sphere, but it can also fluctuate based on the demand of gold that comes from different countries that are now entering a stage of increased wealth and actually want to purchase more gold for the same reasons as investing, portfolio diversification, or jewelry creation. And with more and more individuals putting their wealth into financial institutions so that they can invest them in the stock markets or whatever other investment vehicle they choose to use, in order to create a diversified portfolio, gold can actually play a role in these portfolios. So the more people that put money into the stock market, the more people that have financial planners actually invest the money for them. Well, they may be investing 5 or 10% of their wealth in gold, which again would increase the price of gold. But gold isn't a perfect investment. If you actually buy bars of gold, you're going to have to pay an insurance cost and a storage cost in order to keep them there. And also, if you compare the return of gold over the long run with the return of stocks and bonds, gold actually underperformed those two asset classes. But the point of holding gold isn't necessarily to beat the return of the stocks or to beat the return of the bonds. It's to more use it as a hedge against inflation, as a hedge against political uncertainty. So over short periods of time, gold can definitely outperform the returns of stocks and bonds. And it's during these times that people actually hop into gold to try to make their money or at least preserve their wealth. I'm not saying that you should try to time the markets to find the best time to buy gold and sell gold, because that, you can do very well or you can also get burned. But what I'm trying to say is that don't think of gold as, wow, gold is the best thing, I'm going to invest all my money in gold and make more money than anyone else, because throughout history, gold has actually underperformed. But if we're looking at short increments of time where there has been a lot of political uncertainty, gold can be a very valuable addition to your portfolio. And the last thing that I want to say about gold is, since it's traded in USD, if for whatever reason the United States dollar starts to depreciate, all the other currencies, if they remain constant, meaning they actually appreciate versus the United States dollar since the USD is depreciating, since gold is in USD, you can then buy more gold for less amount of your local currency. So if there's a problem in the States, or if there's a lot of political uncertainty in the States, or if there's another debt ceiling crisis and the US dollar starts to decrease, gold becomes cheaper for everybody else to buy. So this could be an interesting time for you to actually start purchasing gold at a slightly cheaper price. So overall, gold has remained very relevant in today's economy and in today's portfolios, not only because of its historical relevance and its properties that actually helped its rise to prominence, but also the fact that gold has been known to retain value because of the value that we attribute to it, as well as its overall rarity. So it may be a good thing, especially in these very uncertain times, to look at your portfolio and maybe start looking into investing in gold. Not large sums of money, maybe 5 to 10% of your portfolio, depending on what you're trying to achieve, just to diversify a little more. Well guys, thanks for tuning in. I hope you learned something today. As usual, if you enjoy the content that I'm putting out, subscribe and hit that notification bell to get notified when I post my next videos. Also, I'd love to hear what you guys have to say about gold, if you think it's still relevant in the economy, if you're actually investing in it, and if you've had negative or positive past experiences investing in gold. Let us know. We'd love to hear more about it. Have a great day, guys, and I'll see you in the next one.